Welcome to our Long Verticals and Diagonals webcast. I'm Connie Hill, Senior Manager here at Schwab. You know, we have a lot of things going on in the market right now. You might feel like you're on the roller coaster, and that's okay because we probably are feeling like we are on that roller coaster. Today, we're going to cover a lot of ground. We're going to see what's been working well with our trades, what things might not be working well. And I have a wide variety of trades that I'd like us to look at as we get started here today. So lots of ground to cover here. Now, I am joined in the chat by good friend, fellow coach Barb Armstrong. She's here to help me address some questions maybe I can't quite get to. We'll both keep our eye on the chat. So as you do have those questions, go ahead and chat those in. Those of you that are listening on the recording, we welcome you to our webcast here as well. And when you have questions, post them in the comments section in YouTube, because we go back and check those every day, make sure we get your questions answered for you as well. All right, well, I hope you're following us on X. Barb and I post a lot of different content on X that might be useful and helpful to you as a trader. I am Connie Hill, CS. Barb is Barb Armstrong, CS. So would love to have you give us a little follow. Let's go through our disclosures and let's get going with our agenda. Options carry a high level of risk and are not suitable for all investors. What we talked about today is intended for educational and informational purposes only. Don't consider it a recommendation. We will be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim, a little bit different than the mobile, a little bit different look than the web. One thing that Paper Money does differently than a live market is that it does not assign short options early. That's something that's important in our class because we do a lot of selling of options. And so just know that we might have a scenario like that and Paper Money won't assign early when a live market possibly could. We'll try to point those points out when they happen. Past performance of any security or strategy does not guarantee future results or success. All right, today we're just going to have a quick announcement. Going to talk just a little bit maybe about some concepts with long verticals and diagonals as it relates to the Greeks. Anytime we're looking at these trades, we are talking about what about the price? What is time doing with the option? What is implied volatility? What are the impacts of those elements of an option price? So we talk about that quite a bit. And we're going to be looking at a lot of examples here today. Let's start out with our announcement. Our short announcement is this. These are the upcoming workshops and market drive events that you might be very well interested in. We've got Dallas for the advanced options. That's going to be next week, not this weekend, but the next weekend after that. Then we've got Boston the next weekend after that. And then a month later in Chicago will be the market drive event. So if you can get to any of these, you will like them. You will learn a ton. And it's just nice to be in that kind of an atmosphere with fellow traders. Barb goes to these all the times, and she can attest that people absolutely eat it up. It's just good, a good experience for you. All right, as far as option strategies, in this class, we talk about diagonals and long verticals, which are both considered directional. And as clarification on that, you know, sometimes people say, you know, I'm not really sure when it's best to do a certain trade. I'm not sure when it's best to do a vertical or best to do a long vertical or a diagonal. Now, it's going to draw a little diagram on here if I can get my pen working just right. And I think a lot of it has to do with the expectation of movement. Okay, if we have a stock maybe that we're expecting to go sideways, maybe not move a whole lot, we might consider a diagonal. We'd also put a little bias on there whether we think maybe it'll float a little bit up or float a little bit down. If you are looking and comparing this to other option strategies, you might look at, say we're looking at a short put vertical or a short call vertical. We might expect a little bit of movement up, but we also could expect some flat here. All right, when we're looking really directionally, that's when we might consider something more like a long option or a long vertical, where we think maybe the trajectory is going to be up, I'm going to say steeper than just a little bit. Okay, not that it has to go straight up. That's a little difficult to happen. Okay, but just this idea that it's expected to move a little bit. And then one thing to keep in mind here, let's clear out these arrows, is at expiration on both of these trades, the ideal position for the stock to be will be above a short strike price on bullish strategies and below the strike price for bearish strategies. So looking for a little bit of movement there. Time decay is offset a little bit because we have both a long position and a short position. Right, on a long vertical, we buy a long option and sell something out of the money. It lowers the net debit significantly, especially if you're looking at a real expensive stock. But it's not impacted as much, say, for example, with theta and vega, volatility and time decay, because we have the two options, okay? And they kind of offset each other to a little bit. And that's the same thing with that volatility. Typically with volatility, we expect it to help the longer leg because we expect volatility to increase. However, that also gives us a little bit of a risk because if we have a volatility, say that pops on us or drops on us, that is going to impact that longer leg. Okay, now let's take a look here at the market. And I wanted to do something with you here. We don't look at the market a whole lot, but we've had an interesting day, right? First, we were down quite low. Now we're just about fairly even here on the SPX. But the big driver of the market today is what? If you were going to say blank is the big market driver of the day, go ahead and tell me what you think it might be. I might think it's something different. But first thing this morning, the thing with the markets was that some comments coming from the White House, right? That maybe there was not going to be this friendly and not friendly ending soon with the conflict in Iran, and that maybe the U.S. might attack harder. Okay. Well, what did that do to our oil markets? Whoa, they popped up really quite big. I think they're settling back a little bit now, but initially this morning, crude oil got up as high. I think this was like about 113. Yeah, 113.97. So it's pulled back a little bit to 108, but earlier today, man, that spike really was driving a lot of things. Yeah, you guys are nailing it. Oil, the news with oil, the geopolitical situation, oil and Trump together. Yeah, that kind of sums it up. That's true. So these things really are causing us to feel like, man, we are just feeling like we're on a roller coaster of sorts, right? Our volatility index initially today had shot up, and now today what's it doing? It's just kind of settling back down as the price of oil settles. Now, I want to do something with you here, and I want to talk about if crude oil can move the markets that much, what has it done in the past? Okay, so we're going to come over here to our studies. I'm going to hide our 10 and 30-day moving averages here. So let me just kind of put a hide on them. And we are going to do a comparison. And we're going to compare our oil contract, which we don't trade futures, but they're so helpful in what we're doing. And we're going to compare it to what the SPX is doing. Okay, it's going to be this purple line on our chart. And I'm going to go back 5 years to when was oil about as high or even a little bit higher than where it's kind of edging to right now. Yeah, that was back in 2022. So at one point it got up to 130 this particular week and then pulled back. But you can see it was in these higher areas. And when it was in the oil prices were in these higher areas, what happened to our stock market? Well, this is the SPX, right? So we can see, man, as that oil sparked or popped up, it really was creating quite a bearish scenario on our markets. And it took the oil to come down quite a ways before, in fact, it had to come down here to what, about maybe 80 something, less than 90, before it started to go back up. Okay. So I just want you to have that relationship in mind. Now, is it guaranteed to do it right now? Well, so far that's what it's kind of doing. However, it's never a guarantee. And that's why we always want to look at it fairly closely. In fact, you can see the SPX had been going up quite strongly as these oil prices down here were lower, lower, lower. And then as soon as oil spiked, yeah, then we saw a more significant correction on our markets. Okay, so keep that in mind as you're looking at things. Now, I want to take a look at a couple of new trades. Let's maybe get rid of our comparison here. We'll bring back our moving averages. Come back to, well, let's go ahead and grab that. And then let's change this to maybe say a 6-month chart. And I want to show you a couple of trades I got in first thing this morning. I was afraid they might move a little bit before our class time. So I just got them in right at the beginning of the market day. Okay, so let me show you a couple of things that we've done that we are now going to track going forward. First thing we're going to take a look at is FSLY, Fastly FSLY Freescale Semiconductor. Now, some of the semiconductors are down today. But as I was looking at this last night, I was seeing this little pullback and kind of this move off the 10-period moving average and a little pop that it had yesterday. Today, what we did is we put on a conditional order that said if this went up some more, get us into a trade. And so let me clean this up a little bit here. So Fastly, what we did, kind of clean this up so it's a little bit easier to just focus on the one we're thinking about and talking about right now. We went ahead and did a long haul vertical on this. We did it out in May for the monthlies. That's where the options were the most liquid. Okay. So we've got about 43 days for that to work. So ideally, what we want Fastly to do is go beyond our 35 long call, or our short call rather, in this long call vertical. That's ideally where we would like the stock to be getting to, and it's got plenty of time to get there. We are up on the trade a little bit so far, not a ton. We got in at 210, and now it's up to 235. Initially, I had that position in last night, and I wasn't so sure it was going to get executed today, but it did, right? When the markets were starting out fairly down, I was like, we might not get really filled on that. Let me show you another stock that we're going to be looking at here. And this one took off a whole lot more than I thought that it was going to take off. This is Planet Labs. Now, I guess maybe with the air, or I shouldn't say the air, the launch, the rocket launch to go to the moon again yesterday. I don't know if any of you watched that. That was just kind of fun to observe. But maybe there's a little bit more interest in planet and air and space technology. Maybe it got a little boost from that. I don't know exactly why it's up here today. But what I was seeing last night is I had seen, it pulled back here, kind of came down to the 30. We had a nice little hammer candle there. And then yesterday it gave this bounce. And what some might be looking for is a close above the high of the low day, right? This is our little Cahold day. So again, we got into a little position knowing that we had a Cahold, and it's really taken off today. I mean, I was not expecting it to be up 15%, but maybe people are a little excited about that. In any case, let's go see what trade we put on that we're going to be tracking and what we've done here. And we need to put in some closing orders on both of these. Okay, we just barely got the entry today. So on Planet Labs, we are in another, well, not another, a 30-33 long call vertical. So it's 3 wide versus this one that's 5 wide. We paid $4.55 for it. Right now it's up to $770. So we are off to a really nice start on it, up $900. And we were able to do, because we can risk in this class, we risk $2,000 and no more per trade. That allowed us to do 15 contracts here, 9 contracts there. Okay. Let's talk about exit points that we want to be monitoring for. Number one thing we've been doing in our class a lot. Yeah, NASA, not a space agency. Thank you, Wacky Whack. Yeah, I forgot it was actually a NASA space launch. We haven't had a NASA one for quite a long period of time. But we've been putting in profit targets on our long verticals. Okay, so let's take we'll start with Planet Labs. We ideally want this to be going beyond 33. Right now it's at 35, so it's in pretty good shape here. It's a nice start to this trade. And so when we get a percentage of the gains here, we're going to be interested in maybe taking it off. Where could it go? Well, the most recent high was up here at 37.05. So that's almost a couple of dollars away, about $1.80 or so away from that. So there still is some upward movement there. What percentage, and I'm going to go with the class number here on this one, okay? What percentage of a gain would you be pleased with that you would say, yeah, let's take the trade off? Okay. What percentage are you happy at? 50%? Are you happy at 60, 70, 80? And you can throw 5% increments in there as well. So I'm going to have you just type that into the chat where your personal would be where you personally would be happy to take profits. Now, has this stock gone higher? It has, but it's been I think it has. Let's come out here to a 5-year. Maybe it hasn't. Okay, this is, I guess it's only been around for about since 21, so about 5 years. Not quite. Okay, what percentage would you be happy at? 30, says Zach. You're not greedy, Zach, are you? You're like 30%. Okay, 70, 65, 55, 50, 50, 50, 75, 50. Wacky Whack, I'm too old to have any class. No, you're not. All right, and John, you're more focused on let's get a majority of it, maybe 80 to 90%. Now, none of you are wrong and none of you are right. It's really a personal preference. Okay. Some people, I'm going to say, have really short attention spans, and they're like, man, I get up a little bit. Yeah, I'm ready to take it and go find something new. All right, so the majority number here, can you guys tell what the majority number here? The majority number here is 50%. You're like, take the money and run type of attitude. Okay, so let's go ahead and put that order on. Let's see here, 455, no, 115 is what we paid for this, and it's $3 wide. So what is our max theoretical gain? Let's grab our calculator and move it over here. So we'll take $3 minus 1.15, and so 185 is our max theoretical gain on this per contract. Okay. If we're content and we're happy to take 50% of that, let's multiply this by 0.5, and that would be about 92 cents per contract. So let's take 92 plus our current net debit of what we put into the trade, 115. That would say let's get out at 207. Okay, so we're going to go with the majority rules on this particular trade, and that 207. Just make sure I've got that right. We're going to create a closing order. When we can sell this for 2.07, it's not that high yet, or we'd be hitting the trade out button, right? But we'll just have that sitting out here. We'll have it as a GTC. Now, some of you might also like the profitability that we have in the trade right now. And so you also might be interested in putting in another side, doing maybe, say, a one cancels other order, having a target and a stop. So this would be the target side. We could put a stop side in here if we wanted to. We don't have to, but if you start getting to a point when you are kind of content with the gains, you might consider starting to do that so that if you have some more upside, you can take advantage of that upside. But maybe on the kind of the low point out in this trade, you're deciding, I don't want to give that much back, but it's up decent. Let's see what our dollar amount is right now. $900, right? So some of you might say, well, I'm only willing to let this go back to 150 or something. Now, we're not going to do that, but if you wanted to, you could. All right. Let's go ahead and put this in our, oh, it already knows it goes there. Very good. Our dynamic diagonals. All right. Let's see. Just seeing what it, maybe Dragon, you had a question there. If you still have a question, go ahead, let us know what it is. Okay. Let's look at our other trade. That was Fastly, FSLY. Now, Fastly's been in since their last earnings, man. This is a stock that's really taken off. You can see right here when it gapped up, it was about 15 bucks. Many times in this class, we look for stocks that are trading a little bit higher than that. So it's just recently come on the radar, right? If I'm typically looking for stocks that are $10 or higher or $20 or higher, yeah, it just is recently kind of coming into focus. And you can see on this blue 10-day moving average, look at what this thing is doing. Man, it is just riding the 10 really nicely here. Hasn't really even dropped back to the 3 or the 30 since it announced its earnings. So this thing is really on the move. All right. So same thing there. Let's put in a profit target. And where was this guy in the last 5 years? Well, it has had significantly higher prices. Okay, we can go back here 5 years ago, it was up in the 70 range. So is there some upside potential for this stock? Yeah, absolutely. Now, I do think they're semiconductor related. Let's go look at their fundamentals. Yeah, they're in information technology, and they have a cloud platform for processing, serving, and securing its customers' applications in US, Asia, Europe, and internationally. It's called the Edge Cloud. Okay, so, okay, these guys do cloud computing and hosting and that type of thing. Okay, let's go put in a profit target here. Now, in the interest of time, I'm just going to go with the 50% here too. Okay, so let's run our numbers. Let's clear things out here. So let's close this one up because we're focusing on Fastly. And on a $5 wide spread, and we got in here at 210. So if we take our 5 minus 2.1, that tells us what our max theoretical gain is, okay, which is 290. So we're going to go half of it, just like we did with the other group, okay? So we're going to multiply that by 0.5. That gives us $1.45. We're going to add $1.45 to our current 210, and we will be content to get out at 355. Okay. So let's throw it in. Create our closing order at 355. We're going to sell the whole vertical. I think that was 355. Okay. 355. Okay. We're going to make it a good till cancel. Same thing. If you wanted to put a stop and this target on, do it as an OCO order, you certainly could. We're not going to, but we are going to be watching this. We're going to be looking for retracements. We're going to be looking for a change of direction. Okay, so we'll definitely want to keep on top of these. Koala wants to know, where did I find these low-cost stocks? Yeah, good question, huh? Many of the, actually both of these two came from a scan that I do almost every morning, and I publish it out in my exit. It's called Early Morning Movers Bullish. I have an Early Morning Movers Bullish and Bearish, and I'll post, typically I'll take a look at what industry group, or what sector rather, is really dominating the results and post about them. So that's kind of where these two particular stocks came from. However, I am going to show you something real quick here. This morning, one thing I wanted to do was have us have a go-to watch list that we could use to find trades that are interesting for this class or applicable for this class, for a diagonal or a long vertical. So in the scan tab, I had an old scan that looks like this. All right, and let me just show you the elements of it. So we have basically we're looking for stocks that are a minimum of $20. Now, sometimes I'll have that be at $40. For bearish stocks, I really like $40 to be the minimum because I want there to be some room to drop. And so I changed this one a little bit so that we could find some lower price stocks here, starting say at $20. And then I've said, okay, the average volume, which this comes from the study filter. Reminder, study filter does not work in your paper account, but it works in your live account. So you'd have to create this in your live account, okay? And instead of, I think 50 is the default period here on the average volume, I've gone with the last 20 days. So we're looking like the last month of activity. And I put in a pretty high threshold, 2.5 million. Why so high? Because we're looking for liquid options. That's the name of this scan, liquid options. Now, I'll have you note up here, I had it scan in preset watch list called penny increment options. That's something that's on the Thinkorswim platform that already does some weeding out of options that are trading in penny increments, which means they're not trading necessarily in dime or 20 cents or 25-cent increments, right? They're trading in really small increments, which is nice. And then this particular one, I've intersected with the S&P 100. Now, could we go to the S&P 500? Sure, we certainly could, right? You can take maybe an outline of this and massage it however it makes sense to you, to your preferences, okay? Pappy says, if the vertical gets assigned in, then does the right to buy automatically get exercised? I mean, I'm thinking what you're saying there, Pappy, is does it automatically use that hedge lag in the spread trade to cover for the assignment? And the answer is yes, but it's good. It's best to communicate with the communicate with the broker, because sometimes what will happen is they'll just send you an email and say, hey, this is going to be assigned. Do you want to go ahead with using your hedge lag, or do you want to make another trade to free up the cash to cover that assignment? Okay, so you want to do some coordinating there. Texas says, do I already have them posted on LinkedIn? You don't have X? I am just getting my LinkedIn set up. It isn't set up yet. So it's probably something I'll probably still just do on X, but maybe I'll go to LinkedIn. We'll see. Content can be a little bit different on each of these. So, okay. Okay, so I think we're getting clear here on that. Good question there, Pappy. Okay, so if you like this, great, go ahead and save it. I have it saved as liquid options. It says it here somewhere, liquid options. That's what I called it. You can call yours whatever you want. And then what I did is I have the watch list over here on the left-hand side, because when you create that scan, it creates a dynamic watch list, which means it updates all the time. And so we can see, yeah, these are basically the stocks we're seeing here, right? And there's going to be some that are up and some that are down. Okay, and we want to use this for both bullish and bearish trades. We might update that. Well, we won't need to necessarily update it because I updated the query, the little scan, with the minimum price of 20, whereas before I had it at 40. Okay. Next up, question from CB was it, let's see, too late to enter into this trade? CB, that was for the one that we're on, the most recent one, FSLY. Let's see what the price difference is right now. Let's go. So we bought it for 210. It's now up to 230, which isn't really that much of a move. And so I guess it's really a judgment call for you if you feel comfortable with it or not. You know, if it's gone a big distance and you're like, oh, a lot of the profit's already probably in there, then you might not want to do it. But, you know, we do these trades as example trades, and you're free to do them in your paper money account. and trade them just like we're doing in our class, right? So that you get more comfortable with and familiar with the strategy. Okay. Let's see. You guys are having some really good questions here. Yeah, so on Fastly. All right. Now, some of you might feel like PL really has passed you. Now it's pulling back here. Might pull back some today and maybe give a little bit better entry, right? Oh, it's jumping around. I guess it's 975. It looked like it was lower, but I guess maybe it is technically a little bit higher. All right. We have some positions to follow up on as we've got a few things out in the hopper. Before we take a look at those, I'm going to do a quick aside, and I just want to kind of encourage you to use and sign up for and subscribe to our Trader Talks channel. There's a little link in the bottom right-hand corner of your screen. If you click on it, it will allow you to subscribe. And by subscribing, then it makes it a lot easier for you to find our content. And so it looks like this. You look at these lovely mugs. There's Barb here. In any case, our discussion is going on right now. And then coming up are some other discussions, right? Investing in dividend stocks is next. Brent Moore's going to lead that discussion today. Let's see, maybe we don't have Barb. We do not have Barb teaching today, amazingly enough, but here is the rest of the lineup for the day. We've got what are short videos that a lot of people like to view those, and they're kind of designed for your phone, okay, when people are doing stuff via the web. And then we have some bite-sized content that are just smaller videos with concepts in them. They're less than 10 minutes each. Brent and I both did one last week. The one I did was on the Sizzle Index, what it is and how to use it. And it's basically how you spot unusual options activity. Probably heard that. So I give you some insight into how to use that Sizzle Index. All right, time for some management. Yes, CB, we are going to head there next. And I think it is important to follow up on our trades that we do in this class. The diagonals are it's kind of intensive in the sense that they require a little bit more management maybe than some other trades, because the way we've been doing them, they've been going on for a period of time. So let's do a couple of quick hits here. We're going to go to the account statement. We're going to go to APP. Last week, we put on APP. We did a long put vertical. We did a 390, 395. And we don't need 60 days back. Let's maybe just here go like, say 20. This will clean things up for us. Okay. So we did this long put vertical. We paid 205 for it. We went out, we put a target profit out there so that if it hit it, it could execute for us. And so we had said, hey, if we get up to 386, we're happy campers, get us out of the trade. Sure enough, the next day on the 27th, it hit that profit target. And we actually got filled at a really significantly higher price. Now, is this realistic? Sometimes paper money is nicer to you than a live market. Okay. But when stocks move really quickly, and let's go back here to say a 3-month chart. We got in here. So we had some down activity the rest of the day on the day we got in last Thursday. And then it hit it fairly early in the morning. So on this day here, and profit-wise, this was a pretty profitable trade. And I'm going to say because of how nice paper money can be to you sometimes, you know, maybe you wouldn't always get that kind of a fill, even though on this particular trade it did. Okay, and it did move really quickly for us. So we made a profit of $265 per contract. So our 470 minus the 205. So we had $265 a contract times our 9 contracts was a gain there of about $23.85. Okay, so like, okay, that was a nice quick hit for us. Brought in some decent profit. Okay. Next up, we did Alibaba. And on Alibaba, we did a long put vertical, 125, 122. We paid $1.30 for this, got in on the same day. And then let's see which one got filled here. So we were trying to get out yesterday, and I kept changing the price on this yesterday to get filled. And we ended up getting filled this morning at about 7:35. I have it set, the market goes off here at 7:30. And so it went ahead and filled for us for the price we were looking at. But let me give you the analysis of it. On Alibaba, we got in here, it was bouncing off the 10-day, and we did have a little bit of support there. My expectation was that it was really going to bounce below it, but it didn't. Okay, it just kept kind of bobbing along in here. And in fact, 2 days ago, it was not a profitable trade. So yesterday, I put in, hey, if this stock breaks, this was the mentality, if this stock breaks support, let's just take some profits and get out, whatever those profits might happen to be, because it was looking like it was using this support and it just wasn't being that profitable. Okay, so that's why we took action today, had it sitting out there, execute if it dropped, and if not, we were going to get out of the trade in our class today. But it did drop, did hit that target. Okay. Ooh, Koala liked that Sizzle Index video. Good, I'm glad to hear that. Next up, those are the two long vertical trades from last week. So kind of pop. I have not figured out the profit yet on this one, but say 175 minus 130 gives us 45 cents of profit per contract. So if we have 45 cents times 15 contracts times 100, so about, oh, I said plus 100, so minus 100. All right, let me do this again. Let me clear these numbers out. We'll calculate it. $1.45 is really what the difference is, times 15 contracts, and times, not plus, times 100. About $21.75 is what the profit was on that this morning that we took. Okay, so sometimes these directional trades, you can get a bit of a profit on it. And sometimes it's just helpful to be happy with whatever that profit is and not try to milk it for everything. Okay. And I kind of get the idea that some of you are thinking that same way when you say take profits at 50%, take profits at 60%, take profits at 80%, right? You're not trying to milk everything out of it because that is really hard to do. All right. Let's look at our diagonals. Ooh, we have a lot to talk about with our diagonals. Akamai. Akamai is one that we had a long call out in May, so we still have some time here. And we've been selling against this option. We sell it, we collect some cash, and then we close out one, and then we sell it again for the next month. Because we got into this trade initially January 22nd. So that's how long this trade's been going on. So when I say diagonals are a little bit more intensive, time-wise, they can be, simply because it's a trade that develops over time. So our long call actually had been pretty nice, actually, from $10 to $23. Last time we sold the 120 contract for April. We brought in 234, and right now we're a little bit down on it. Well, why would we be down on it? We could be down on it if the stock has been heading up. What direction do you think the stock has been going? Those of you that have been tracking this. Well, today it's up. This is when we sold the option, the most recent option. Okay, I think it was that day, 318. Yeah, I think so. And then that's just kind of what's happened since then. So we're going to continue to hold on to this one. We like the increase we're seeing here in our long call. And we're going to see if maybe we could get out of here when it gets to a certain percentage. Looks like I've got an order set up there. If it can get down to 47 cents, 47 cents will be about an 80% profit of 234. So it's not there right now. It was closer there yesterday, actually. but we're just going to let it work. Okay. Could we change that if we wanted to? Absolutely. We certainly could. All right. Let's look at what we have with NVIDIA. NVIDIA, the number here is showing that we're down on the trade. This is one that we've had quite a few puts that we've been able to sell against it. Okay. We have this April 17 option. We got into this February 12th. Okay, so we've been in the trade for almost a couple of months. And our longer dated option is not the one doing so well. And looks like on our put that's due to expire, this was, I think, Monday the 6th, looks like it hit our profit target and we're out of it now. So let's go look at our filled orders. So where is NVIDIA? So here's our NVIDIA. So I guess a little bit before our class started, looks like it went and bought it back at what we were looking for. In that case, it was 19 cents. And so filled us on it. Great. We're going to move on. What do we want to do now? Well, let's go ahead and sell another option. Now, Tesla and NVIDIA have Monday, Wednesday, Friday options. Okay, not just the weeklies. So they have more opportunities there. What we typically have been doing is selling the Friday so that in our class on Thursday, we can see what's been going on with it. Now, if somebody wanted to be really aggressive, they could say, I'm going to sell Monday. I'm going to go sell another one for April 6th because we've got the long weekend. We've got tomorrow that the market is closed, Saturday, Sunday. We've got 3 days that we could take advantage of some time decay. But then if you do a Monday, you're really being on top of it on Monday. So we're going to go just what we have been doing. So let's go ahead and sell another April 6 option. That April 6 option. Not 6. Let's go to the 10th. Let's go to the 10th. So on April 10th, let's get the right stock up here. So on the 10th, let's sell something that's a little bit out of the money. Let's maybe sell, say, $172.50. We'll bring in another $2.10-ish on this. And we're going to put it in our diagonals and long verticals grouping here for our class. Okay. With these, where they expire pretty quickly, you really are staying on top of it. Now, when we were together last time, I think we had sold the option for the one that expires today. And we had hit our profit target. So that's why I sold the one that was due to expire on Monday. But then it hit the target earlier today. So now we're just going to sell again. And that's the idea with those diagonals, is you're just trying to sell against it over and over again. All right. My time is up. That is the last one I'm going to be able to review. If I can put together some thoughts on Tesla, we still are in Tesla. All right. And on Tesla, we're long here on this put option. We don't have a short one against it. So in our class, we were going to sell one. So I will go ahead and sell another option. I'll pick something that's maybe just a little bit out of the money on Tesla. And I will go for the Friday expiration, which will be the 10th. And then we'll probably wrap up the trade there. All right, you guys, you've been great. You've had fantastic questions. There was no survey that I saw today. But if this was helpful to you, go ahead and hit the like button on the way out. Make sure to follow Barb and I on our X, Connie Hill CS, Barb Armstrong CS. And then to find our videos and our content so that it's easy, go ahead and subscribe to our Trader Talks channel. All right. Mentioned earlier that coming up next was going to be Brent Moores with the investing in dividend stocks. So take a little break and we'll see you back here in 15 minutes. Thanks, everyone. Thank you, Barb, for your help. Bye-bye.